Let's dive into our crop markets, shall we? Let's start with the corn market, see how we're opening up today. Well, so far on the corn, as we look at the March contract, it is fractionally higher. We're 3/4 higher at 373 1/4. And December now just one tick higher at 382 1/2 per bushel. On the soybean side, a little bit of strength. Not much, but a little. We have March up 1 3/4. We're now at 880 3/4. July up 2 3/4. September up 2 1/4. And I'll throw in November, no extra charge. It's up 2.5 cents. Now onto the wheat. In Chicago, we have the March contract 3/4 lower at 538 1/4, while July new crop is down 1 1/4. In the Kansas City market, we have the March now trading 3/4 higher at 455 3/4. July new crop also 3/4 higher as it stands right now. Minneapolis wheat this morning. On that March contract, it's up a couple of pennies at 518. On the July contract, it's showing some firmness too, over 2 cents higher. Now let's take a look at what's going on in the cotton market. Let's jump over there. We have the cotton on that December contract showing some losses this morning, and it is showing a loss of 51 points at 66.45. And let's take a look at canola as well. If we could, we currently have the March contract 160 points higher. In other words, $1.60 higher in Canadian currency. It's at 449.40 per metric ton, and May is up 80 Canadian cents. All right, let's go to Brian Hoops of Midwest Market Solutions and sort it all out this morning. Brian, thanks for joining us. We have a little bit of firmness here in the grain trade. It seems a little bit anemic at this point. Do you think they'll build on that?
Well, yeah, a lot of the strength is coming in soybeans and soybean meal. If we look at some chart-based action, soybean meal is actually making new highs for the week here. So it's taken out Sunday night, Monday's highs, and has turned very positive on the day. And soybean meal is acting technically one of the more stronger markets. It's had very strong commercial buying, end-user type buying in this marketplace. And so we may see a nice rally develop in the soybean meal that could spill over into the soybean market, which, it's going to be badly needed because there's not much hope for the upside other than just considering to see some manageable appreciation in prices in here as we go into March and ahead of the supply and demand report.
So the March is up $3.10 right now at $289.60 per ton. If you look at soy oil, though, it's continuing to get some pressure from what I understand from a lower Malaysian palm oil market. It's been on the ropes here for about 4 months now. It's really getting hit with a lot of lack of demand, I guess you would say, coming out of China and driving that market down, and that in turn is pulling our soy oil trade down too, right?
Yeah, exactly. That market has dropped considerably, and we're seeing some strength in the soybean meal as a result of intermarket spreading against the soybean oil.
Okay, well, what about the fact that a lot of folks are talking about how the U.S. dollar is really hurting our attempts to export our grain overseas? Now, we heard that the Brazilian real has declined about 9% in value. And the Russian ruble really took a hit here recently, and that makes their wheat so much cheaper than ours. How do you see that shaking out in the coming month or so?
Well, you're exactly right. The real and the ruble both are plunging, and at the expense of that is the U.S. dollar continuing to move higher. And, one factor that we talk about going forward as far as exports, a stronger dollar is going to hurt our U.S. exports considerably. There's a lot of talk this summer of lowering interest rates, which will probably make our dollar appear even more expensive as we'll see foreign countries step in and buy the U.S. dollar. And that strength in the U.S. dollar is going to translate into a strong economy in the United States or vice versa. A strong economy, you always have a strong U.S. dollar, especially when compared to some of these other world countries that their economies are slowing. So unfortunately, that's going to be a drag on our exports going into the spring and the summer months.
All right, we'll open up our livestock trade in just a moment. We're talking with Brian Hoops, and we'll be back after this. Let's open up our livestock trade. We'll start with the live cattle, and on the big board in Chicago right now, oh, we see some plus signs. Goodness, they've been kind of scarce here recently. We have the April contract, 47 higher now at 113.42. And you have the June contract, 35 higher at 106.15 per hundredweight. Let's switch over to our feeder cattle market, see if we can find some over there. Oh, look at this. We have March, April, May. They're all over $1 higher. Well, at least $1 higher. So the March is exactly $1 higher now at 133.97. The April up $1.32. We're at 135.47. make it $1.35 higher now. The May contract up $1.02. The deferred's not quite $1 higher on the fall months. All right, let's take a look at our lean hogs, see which direction they want to go today. They can't decide. They're mixed. We have April down 30 at 64.38. You have May just a nickel lower. And you have June going up a dime, as well as July also up a dime. So not much commitment to the upside on the far out deferreds, but the nearby April is under a little bit of pressure here this morning. Let's go back to Brian Hoops. So a rebound in the cattle market. We don't know if it'll stay, but that's been a pretty volatile week. We saw the cash market kind of fall apart yesterday. What do you think may happen today?
Yeah, the cash did follow the futures sharply lower yesterday, and we'll probably see some additional cleanup trade throughout the rest of this week. But it's really encouraging to see the live and feeder cattle markets, make some new lows. April contract did take out yesterday's lows and now starting to come back. We need that type of technical action to indicate there's a bottom in here. But, like yesterday, it really probably depends on what the stock market wants to do. If we can maintain the gains the stock market has into the close, that takes a lot of the selling pressure away from this cattle market, which is probably fundamentally too cheap right now and should have some sort of a big snapback recovery. But again, it's really going to depend on if the stock market can sustain those gains into the closing bell.
Yeah, it makes you wonder. It was pretty obvious that the equity markets earlier this week, where they had that nearly 2,000-point drop on the Dow, really did send the jitters into the livestock trade after that. On the hog side, everybody's waiting to see if China is finally going to come in and buy something. They were totally absent from the market last week. We'll get new weekly export sales numbers coming out tomorrow morning before we open up the day's trade. You willing to go out on a limb and think they're going to buy anything this past week here that will show up on the report?
Yeah, I think they will start to show up as as light buyers. But even more importantly, last week they showed shipments moving into China, and I think we'll continue to see more pork shipments being sent to China. We would like to see some fresh buying interest, but at least we are moving some product into the country, and that's a very encouraging sign for our longer-term demand.
And of course, an ongoing concern is I was hearing some stories that some of the ships can't be unloaded, though, that they're just sitting there in the port, and they don't know if they can bring any more in because they can't unload the ships at this point. So that's always kind of a concern, too. Brian, thanks for all the insight in the markets. Covered a lot of ground today. Thank you so much for that. Brian Hoops, Midwest Market Solutions in Springfield, Missouri. So we're off and rolling. We'll see if the trade can continue on the pace they're on right now.
It's certainly already been a volatile week. So
it has
only
been,
at Wednesday.
Crash helmet.
Thank you very much, Marlon.